Hi, welcome everyone to SEB 10X. This is the third annual event. I have with me Alex. Alex is the co-founder and CEO of Nansen. My name is Gautam Chhugani. I'm the managing director and senior analyst for global digital assets at Sanford Bernstein. So Alex, thanks. Great to connect. Maybe start with I think since audience is fairly diverse, maybe start with just a quick overview or introduction to Nansen, and then sort of we can get into more interesting questions.
Sounds good. Hey Gautam, good to see you again as well. So my name is Alex. I'm the CEO and one of the three co-founders at Nansen. My background is initially in artificial intelligence. And I started working in the crypto space in 2017. So my passion lies in the intersection of crypto and data, and on-chain data, I think, is the most fascinating part of that. Nansen is a blockchain analytics platform. We are focused primarily on helping investors discover new opportunities, perform due diligence on those opportunities, and then also to defend their portfolio by getting alerts when important events happen, which maybe we will talk a bit about later with some anecdotes and examples from that. So we have more than 130 million addresses that we have labeled up, which means that when you use Nansen, not only do you get information directly from blockchains in terms of on-chain data and an understanding of what happens on the blockchain, but you also get this contextual layer on top of that. So you can understand what these different addresses are. You can understand which applications are being used the most. You can understand capital flows in and out of exchanges. You can understand what the smart money addresses are buying in terms of tokens and NFTs and so on. So that's primarily why people use Nansen. They try to surface the signal in everything that happens on the blockchain.
And obviously we've titled this particular session. Nansen is trying to be the super app of information for Web3. Can you kind of walk us through this super app strategy, right? So I know you see this product a lot more than on-chain data, right? So give us the big picture in terms of how you're kind of thinking of this more holistically.
Yeah, so I think if you look at the information diet of a crypto investor today, it basically involves having 20 different tabs open to understand what's happening in crypto. If you're looking at news, if you're looking at research, if you're looking at market data, on-chain data analytics, DeFi, NFTs. And so I think, first of all, that's not a great user experience. And if you compare that to traditional finance, most people, if you think about what's the information super app in traditional finance, you'll probably say that the Bloomberg terminal is the information super app. And so many people have said that it would be good if you had such an equivalent in the crypto space, where of course we want to have a variety of different products in the information space in crypto as well. But if you had kind of the default point, like the shelling point, if you will, where you can go and get information, that would be very helpful. And so I think that spot is up for grabs. And I think we are very well positioned to take that spot, because we do have a unique edge in the sense that we have data that no one else has. We have the best coverage of what actually happens on the blockchain, which I think is the most fundamental building block if you think about being the information super app of Web3. But then we also have the opportunity to expand out in other areas, such as research, where we actually have a pretty good research product already, Nansen Alpha, and we want to make that offering into a more scalable product that more people can access in different ways. We also have a portfolio product that's going to launch in the coming weeks, which will allow you to actually keep track of your own holdings across 40 plus blockchains and 400 plus DeFi platforms, and also track potentially other entities as well, because the blockchain is transparent, right? So the first point is really to just make this less fragmented in a way from a user experience point of view, where you can gather everything in one place and you become that Schelling point. And the other part is that I strongly believe that there are some very strong synergies between these different vertical applications, if you will, within that information sector. And so if you're building the best portfolio tracker, that portfolio tracker will benefit from having really good NFT data, for example, right? Yeah. And so you'll also benefit from having really good DeFi data. And your research product will benefit from having the best labeling and the best coverage of on-chain data, right? And so I think there are these very strong and interesting synergies that arise when you get the economies of scale and you get a large enough organization that can build on the same data platform, but you can create these different applications that are catered towards slightly different customer segments and also slightly different use cases. So that's kind of to sum it up, I think the first point is to just make the user experience better for people who are active in crypto. And the second part is to actually leverage these synergies and the network effects and the economies of scale that you get from having all this stuff in one place.
Yeah. And it's kind of counterintuitive, right? Because you kind of always look at data as obviously a commodity, and data analytics sort of is something that is done at different levels depending on what you're trying to actually achieve. But I mean, if you kind of look at user behavior today, right? Like if I want to look at market data, I'd probably go to a CoinMarketCap or CoinGecko. If I want to kind of do a quick portfolio tracker, I kind of have some app on my phone, which is just maybe, in the previous days, it used to be Blockfolio. And so people don't know how to kind of track their portfolio. So many traders don't even know their P&L, right? Because none of the exchanges are actually showing P&L. Like this is what you invested at, this is what you exited, which is actually very basic. Right? Like people have to literally I've seen people maintain like Excel files or separate records where they're like, this is my entry price, this is my exit price. So it sounds like there's a lot more out there, right? In terms of like, if you have to kind of beyond just on-chain data, it almost sounds like this is like people need like one single seamless, avenue to kind of go to for them to kind of achieve this, right?
Yeah, absolutely. And so I think there's another trend here that is kind of implicit. I didn't talk about that, but there is a trend towards on-chain, right? If you look at 2017, 2018, practically all of the trading volume was happening on centralized exchanges. If you look at decentralized exchanges now and look at the volume of Uniswap versus Coinbase, they're actually on par now, right? And so that's a huge shift. And that's why, you have to kind of skate where the puck is going. And with Nansen, I think we're really well positioned for that future of finance, which is going to be on-chain to a large degree. And so, sure, there's a lot of interesting data that you can pull out from centralized exchanges and centralized platforms. But I do think that the magic happens on-chain. And so if you can create, for example, a portfolio tracker, which is truly multi-chain, which has not just the raw transactional information, but it also gives you an idea of like what the different smart contracts that you've interacted with and what's the value of your individual NFTs, which is actually a non-trivial problem to solve. If you have all that stuff in one place, I think that's hugely valuable. I asked on my Twitter recently how you track your Web3 assets, your NFTs, your tokens, DeFi positions, etc. And the answers were like very clearly extremely scattered. There's no like dominant solution at all that people flock to. People use a bunch of different solutions, and many of the people, to your point, said that they're using like spreadsheets to keep track of this stuff. And so that's at the individual level. And if you think about the institutional level, a lot of people are building these things in-house, which sure, you can do that, but it takes up a lot of bandwidth from your engineering resources and your quants, which you might want to spend on like trading strategies and investment strategies instead, right? So building that sort of foundational infrastructure, to me, it makes more sense that someone else outside of a fund does that rather than like spending your precious engineering resources internally to get that sorted.
Yeah. So, I mean, I kind of like that. I mean, so Nansen is very sweetly positioned, just like decentralized finance will grow and more on-chain finance will grow. You will kind of grow in line with that, which is kind of a nice place to be in. Let's get more specific, right? How does Nansen become useful in a bull market, and how does Nansen become useful in a bear market? So we had probably one of the worst bear markets recently. What were the tangible instances, and obviously everyone knows the big events that happened. What were the tangible instances that you saw which very much felt like moments of truth for your data, right? Like if people were tracking Nansen at this point in time, they would have avoided this mistake or something of that sort.
Yeah. So the first that comes to mind, I was in Miami a few months ago and we had dinner with one of our customers. And they told us that they had set up Nansen smart alerts on the curve pools where you had UST, right? And that meant that when the liquidity started getting imbalanced in those curve pools, they got notifications directly through their, I don't know if it was Telegram, Discord, or Slack that they were using, but you can configure it for any of those. And they got an early warning that something's going on here. And so they withdrew all their liquidity from the curve pools. And we know what happened to UST, right? So the people who passively had funds in those curve pools ended up losing a lot of money. And my understanding was that these guys saved, maybe tens of millions of dollars just on that move. So that's a very tangible way that you can, that means you've kind of covered your Nansen subscription for life and more, just from that one instance, right? So I think if you go back to this framework of discovery, due diligence, and defense, I would say that discovery is very useful in a bull market. You want to discover, hey, this new NFT collection that's pumping, or this DeFi protocol that's being used, or these tokens that people are buying. That's a discovery thing, right? You just want to discover it super fast. And traditionally, Nansen has been really good for that. That's the use case that when I go to conferences, people come up to me and they say, I made so much money trading NFTs using Nansen. Typically, that's kind of around the discovery use case, because you see Bored Apes being minted, right? You see hash masks being minted, or you see any of these NFT collections at the earliest stage being minted, like in real time on the screen. Which, by the way, I also discovered Bored Apes using Nansen myself, right? That's a clear case of discovery. And then the case I mentioned now with smart alerts, that's more of a defense thing, right?
Yeah.
And so defense is much more important in the bear market. Yeah, exactly. That's a bear market thing. You want to defend your position, you want to defend your portfolio. And there are a few other features we're going to be rolling out soon. For example, we have a vesting dashboard that's currently in beta, which allows people to see when there are vesting unlocks for specific tokens, so that you know that you're not going to get dumped on by certain early stage investors. So I think those are the two edge cases of kind of bull market versus bear market. And then in the middle, you have due diligence, which is always useful, right? That's kind of something that is universally useful, because in the bull market, you want to understand, hey, who is actually buying these NFTs that are pumping, right? Who's buying these tokens? That means digging into that specific token or NFT to understand who are the buyers, what does the liquidity situation look like, how many holders are there, and so on and so forth. And then in the bear market, it's similar. Actually, I would say bear market, or even a crab market, like a sideways market, due diligence is very useful, because it is kind of the time that distinguishing the good from the bad projects becomes extremely important. And so that's kind of, those are some examples, but that framework of discovery, due diligence, and defense is quite useful when you think about how Nansen can be used.
Yeah, and since you mentioned Bored Ape, let's talk about NFTs, right? So when you kind of look at NFTs, obviously one is discovery, second is just management, I guess, for people to kind of track the floor prices of their NFTs and so on and so forth. So kind of almost like a NFT portfolio tool. I know you made some acquisitions in the space recently as well. More broadly from a tracking standpoint, what do you see this NFT proposition of yours? I mean, it almost seems like a separate business stream, right? To kind of evolve to eventually.
Yeah. So NFTs are interesting because we're having this strategic conversation internally right now, actually, to better understand the users who are using NFTs, because you could argue that this is a distinct
segment. You personally are more active in NFTs on Twitter.
Yeah, that's true as well. I think NFTs are just more fun in a way. I mean, they're just more like, going on Twitter and saying like, hey, there's like a 12% APY DeFi pool. That's like, okay, who cares? But like, look at this art piece I bought. That's much more engaging, right?
Yeah.
So I think NFTs are just a bit more fun. But I'm a huge believer in DeFi and lots of other applications beyond NFTs, of course. But the NFT offering we have is kind of interesting from a historical perspective, because when we started Nansen, I did not think NFTs was going to be, a big area for us. It was only after a year that we said, hey, maybe we should create NFT God mode, similar to token God mode, which was the most popular dashboard before. Let's create NFT God mode. Maybe some people will use that, right? And we rolled it out, and it tripled our revenues in like 6 weeks. And it became the most popular section in Nansen. So, and actually, I would argue that the NFT features we have are also, because they came after the token oriented features, they sort of could take the good parts of the token stuff and then add a bunch of new stuff that was very useful. And so I think I would argue that we might have neglected the DeFi and token parts a little bit, but now we're strengthening that again. Whereas the NFT features, we gave a lot of love, and we had very, very passionate, we have a very passionate team internally working on the NFT features. So, and then, we've created a lot of interesting things as well, like machine learning powered pricing estimates for individual NFTs, NFT indexes as well. So, so it is an interesting question, like how much do you lean into NFTs versus other things? I do think that Nansen, we're aiming to be the information super app of Web3, which means that NFTs is a part of that, but it's not the only part. And so I do think that we will remain the NFT analytics leader, but I do think that we will be doing more things than NFTs. And in fact, the fact that we could roll out NFT features so successfully also shows that the data platform is very universal, and it sort of validates the thesis that you can actually roll out new verticals on top of this data platform and succeed and become the leader in that category.
Yeah. I mean, I find this sort of your connection with retail, right? Usually products like yours tend to be far more institutional, because institutions are expected to be smart money and, do their due diligence and things like that. But what's interesting is sort of slowly and steadily you're converting retail into more sophisticated investors, or at least, investors who are using data and information rather than just going by some tweets that people are doing and sort of doing their own work, right? And that's interesting. So I think there are two parts to the question. First, are you seeing some interesting in your signups in the way they kind of spike around? Is it usually around sort of, obviously it's driven by bull markets, but it's usually around some interesting collections that get launched? Or is it just a gradual secular shift where people would like to be more informed and smarter about the way they want to do so? How do you see this sort of your growth, and what are the sort of the patterns that you're seeing in your customer signups?
Yeah. So by the way, I love your framing on sort of leveling up normal, mundane, sort of average investors to becoming more sophisticated and successful. And it aligns very well with our mission, which is to surface the signal and create winners in the future of finance. So I kind of think of Nansen as almost like an Iron Man suit that you put on, and it just kind of levels you up, right? And it's also good for business. If our customers grow their portfolios, of course, that's good for us as well. That means they can have higher purchasing power to get more modules and upgrade their subscriptions, etc. It's a really like synergistic win-win relationship that we want to have with our users. In terms of what kind of customers are signing up, we definitely see a shift towards B2B customers now. And so you can actually classify B2B customers for Nansen in maybe two ways. The first one is on the investors. So think of funds basically. And that includes VC funds, it includes liquid funds, market makers, etc. That's very adjacent to the individual investors, right? And we're generally seeing growth there to the point where at the end of this year, I think we'll have actually more revenues coming from the B2B sector than the individual sector, which was the complete opposite a year ago, when it was, say, 80 to 90% individuals. So the investors, let's call them institutional investors. That's kind of a poorly defined term, but effectively professional investors that are incorporated somehow. That's one segment that we see growth in. And the other segment, which is maybe not that obvious, but we're seeing more interest from, and we have some great customers coming in, is in the operator segment, right? So operators, you can also classify them into a few different subsegments, like service providers, crypto projects, and even blockchains themselves. But these are like crypto businesses, let's say, that are not trying to grow their own portfolio. They're trying to grow their own ecosystems. They're trying to, if you're an NFT marketplace, you want to better understand your users. And we have the best data in the world on what people are doing on the blockchain. So imagine being able to level up your own decision-making internally by not just getting data on your own users, which there's a good chance we have better data than you on your own users, like what they're doing, but you also have data on what they're doing across all these different platforms. And so that means you can build better products for them, you can get more of the kind of users that you want to get, and so on. And so that's why we've worked very successfully with other blockchains like Avalanche, Solana, Ronin, Polygon, right? Lots of different blockchains because they want to grow their ecosystems. But we're also working with NFT marketplaces. We're working with exchanges that want to better understand their users and customers in order to grow together with them, right? So I think that's actually a really something we're learning, that we can actually provide a lot of value for the whole industry by just leveling up people's decision-making capabilities internally. And it's something we're going to be focusing on a bit more going forward.
This is interesting because that is so contentious given how much these protocols end up, kind of shadowboxing with each other on Twitter about who has more users and so on and so forth. So do you think it's a sort of trivial question, but do you think would the data that we see, because I think when I kind of look at this protocol user growth data, I tend to see a lot of these it's kind of contentious in terms of sometimes somebody is presenting a very different set of data. So what do you think is the standard there? Is it monthly active users, daily active users? What should one look at to know who's doing better traction, right? Because it's almost like a source of alpha now.
Yes, that's right. I do think that you should look at active users. If you're talking about blockchain ecosystems, I do think, yes, you want to look at quite basic metrics like daily, weekly, monthly active addresses. It's hard to say users because you don't know if it's people just creating separate addresses and so on. You should also be looking at it from a capital perspective. So what's the total value locked in different ecosystems? What's the transaction volume that you see? How much is being bridged into other ecosystems, right? So I think those are probably the two primitives that you look at, like addresses and then just dollars or assets being moved in. And then you can also look at things like transaction volume, for example, on NFT marketplaces or DEXs. And all of these are good health indicators. Maybe the last one I would say, which maybe is more contentious in a few different ways, but I would also look at transaction fees, because at the end of the day, that's really important, right? That means people are willing to pay to use your blockchain. And so that's why Ethereum is still the king when you think about people's willingness to just pay to use this network, right? So I think those are a few metrics that I would look at.
Don't matter. I know we're digressing, and I want to come back to Nansen. But people say fees don't matter, but the fact that people want to pay and they find it valuable to pay is quite a big signal, right?
Oh yeah, and this resonates with me from a business perspective for Nansen too, right? Yeah. We are some people are not so happy that we're charging for it, right? They want everything to be free. Yeah. But at the same time, if you can charge, that means the product is very likely valuable, right?
Yeah.
They're not paying for something if they don't like it. And so I think it is kind of a thing that's almost a bit forgotten in the Web3 world, that, hey, maybe it's okay to pay for stuff that you find value in, right? Like, if not everything needs to be an airdrop or a free product forever. And so I do think that almost like an essence, or like the essence of a functioning free market is that people are actually willing to pay for stuff that brings value to them and to society. And so, yeah, 100%. I think transaction fees in the blockchain context as well, you should definitely be looking at that.
You know, on that note, on your business model, my view is exactly the opposite. I think you're charging too less.
Right.
I'm very serious because I think the fact that someone makes a few $100,000 just paying $1,000 subscription or even in the nearabouts is actually, from a take rate perspective, very low, right? So my question to you on this, which is a serious question, how does Nansen become a more success-oriented transacting business model versus a flat fee, where you can't tell like what's your exact take rate, right? Like, because you don't know what this person has made or saved using your transaction data. I mean, do you think about this?
Yeah. Oh, absolutely. It's an excellent question. I don't think we'll be able to give a satisfactory answer in these next minutes, but something we should dive into some other time. I would say, first of all, what we have now in terms of pricing is definitely not the end state. It is not. It is kind of like the most naive way to charge, I think. So I think next step is probably to have more price differentiation, so that, you know, maybe it doesn't make sense to have a fund that has $100 million AUM pay the same as an individual investor has like $200,000, right? That probably doesn't make sense, but not that you have to charge them based on knowing their AUM, but rather that there is an offering which is useful to the $200,000 investor, and there is something else that is useful to the 100 million one, and then you can sort of have a price discrepancy on that, which makes sense in terms of value. And then, of course, if you think further down the road, could you have transactional fees, right? Could you have consumption-based fees? That's an interesting topic. But I would say the first step is to just have better price differentiation. But I mean that in a positive way. It's not that we're going to go out and give different prices to different people in this kind of secret or sneaky way. It's more like you can buy the right product for you at the right price. And we have a lot of work to do to get that right.
We probably just have 2 minutes more, so I'll make it slightly open-ended. Given you're so close to the data, right, and you have so many analysts, like almost an army of analysts, both on the payrolls of Nansen as well as on Twitter, kind of doing this, right? How do you feel about the market now? Like, what does data tell you that probably we are not seeing as sort of outsiders who are not so much in the weeds, right? How do you feel about where we are today, versus the last 6 months, 2 years, or whatever?
Yeah, I think first of all, we have to acknowledge that we are kind of living in unprecedented times. Like, crypto has never experienced this kind of macro environment, especially when it comes to inflation and things like that. So that makes it kind of hard to predict based on even recent cycles, because the macro environment is so different. I've been kind of positively surprised in the last few weeks to see a lot of growth in certain metrics. And so in particular on NFTs, so I keep coming back to NFTs, but if you just look at the number of addresses that are trading NFTs, actually across different chains. So let's say only at Ethereum, right? The last 4 weeks, you've had trending upwards all the address activity metrics. The volume metrics are actually trending up too, but they're much lower than they were, a few months back, as we all know. But you're also seeing growth in some of the other ecosystems on NFTs, right? So I think this idea that NFTs are dead or something like that is definitely wrong. Like, the data shows that there's still activity. There's a lot of activity still from like the OGs and the returning users. And we monitor that separately. Returning users, meaning people who've traded before, versus new incoming users. And there is a steady inflow of incoming users.
Lost Alex.
Oh, sorry about that. Can you still hear me?
Yeah.
Might have had a technical issue there. So I think, to sum it all up, you can actually go to Nansen. You can go to Nansen.ai and look at some of the ecosystem metrics there, which are actually freely available. You don't need to have an account to use it.
I think we've probably lost Alex. All right, get back. Yeah.
Sorry about that. I think we're getting up on time as well, so we might want to wrap up here. Go to Nansen.ai and test it out.
Thank you. I think you were trying to say that NFTs are coming back, so I'm going to say that to the audience. But
sure.
we'll wrap it here. Alex, pleasure talking to you. I learned a lot. Give me a few ideas to do business at Bernstein as well. So thank you.
Awesome. Thanks very much, Gautam.